Welcome back. Still tuned into the market. And yesterday, well, it was a bit of a pause for the equity markets at 10,705. The broader markets too were mildly in the red. Well, let's find out a little bit more about what the trade setup is throwing up for our markets. Do remember, you've got a fairly decent handover from the US as well as Asia. Take it across then to Jayesh, who has all of those details. Jayesh, good morning.
Good morning, Avan. So if you have a look at the market texture for the last hour yesterday, it turned slightly negative after we got the AMFI data, which reported only 240 crores as equity inflow. And that was the lowest number that we got in over 2 years. And because of that, the Nifty swiftly corrected more than 150 points from the day's high and snapped its 5-day gaining streak. One has to also remember that, all of this has happened very close to the 200-day moving average, which generally acts as a resistance point in case we are approaching it from the downward trend. And that is exactly what happened in the market yesterday. Similar was the case for the Nifty Bank as well, more than 500 points that it shed off from the day's high. And now the 100-day moving average support, which is at 22,156, that could actually come into play. But all of this, given the fact that the broader markets were doing very well, the Nifty midcap also made a bearish engulfing pattern, which is very close to the 200-day moving average resistance. So all indices actually, are retracing towards the 200-day moving average, only to face resistance for the first attempt. The Nifty Auto Index really stood out because it made a bearish evening star pattern and managed to close below the 200-day moving average. While today being options expiry, there could be some volatility as the India VIX also snapped its 5-day losing streak and closed above the 200-day moving average.
Thanks very much, Jayesh, for giving us all of those details. Some important levels to map out. Let's find out from our chartists. Dr. C.K. Narayan and Kunal Bothra joining in as always. Morning, gentlemen. I'm going to come to you first then, Dr. Narayan. Is this pause any sort of an indication as to what the rest of the day could look like as well for our markets? And share with us your top trading recommendations.
Good morning, Aman. Good morning, everybody. Well, the situation in the morning is a little bit intriguing. Now, we have to see today's prospects in the light of what happened yesterday, and the fall in the last hour was certainly something a little more than an ordinary profit-taking selling because of the wideness of the breadth. Now, if that were indeed something serious, then ideally we should be seeing the SGX down by a decent margin, which is not the case. So that prompts one into thinking that it was largely day trader longs which got unwound, and therefore the markets became lighter in their positioning, and hence there is no follow through on at the level of the SGX. Now the Dow was also not overly active yesterday, some couple of 100 points, and that does not really make for too much changes on the SGX if it is tracking the overseas market. So the fact that the SGX is not down by any decent degree is a bit flummoxing and raises the question mark about the possible continuance. But however, if you take a look at the option markets and the volatility figures, that is presenting us with a slightly different picture. Now there was a lot of addition to call shorts and a lot of shedding of put OI, and that bespeaks us somewhat of a bearish setup. And we do have the FIs cutting their longs and getting into shorts. So all this collectively is pointing at possible continuation. So how do we resolve this? We look for the first about 15 minutes and then map the area there, and if the market chooses to trade below the VWAP of the first 15 minutes, I think then it's safer to assume that there will be some continuation downward. People will have to be in touch with their brokers to find out what this average traded price at that time would be. I think that is one of the suggestions. But that's all something which we have to see, but we have to side with the trend as long as there is no sign of reversal. We just have some hints. So given that as a background, I would still want to continue with a long bias in the morning, but have tighter stop loss. Two stocks to buy. Both of them had done well yesterday. Biocon and Havells are the two stocks. Biocon punched up to about 411.12, pulled back to about 402.3. And with a nearby stop at 397, I would recommend a buy in Biocon. Stock is still in a good uptrend, can look for a revisit to 412. Similarly, Havells was trading at about 604 or 605, dropped down to about 582. And around this 580-82 level, I find that it has possibility to rise again. So nearby stop loss of about 5 rupees from entry, and look for a target again near 600 levels.
All right, that's the view coming in. Let's get a move on then. Kunal, what is your analysis and rating of the screen basis, the kind of handover we've got and the way we wrapped up yesterday, 10,705, and share with us what would be your trading calls?
So good morning, Avan. Good morning, everyone. So I think a couple of data points which transpired yesterday, and the reason why I think the index sort of saw resistances or corrected from that 10,800 kind of levels. And the first and foremost was the put call ratio, which I believe is a very important indicator to watch out for, especially if you're a short to medium term kind of a trader. The put call ratio hit back to that 1.6, 1.62 kind of a mark, which is again overbought kind of a territory. And generally it acts as more of a ceiling or resistance for the index when you see such overheated kind of put call ratios. That was one of the key reasons why I believe that the index saw a bit of a cool off yesterday. Also, I think if you look at the daily charts, what the index is actually doing is over the span of the last 2-3 months, it's been trying to close a lot of gaps which were created in that big fall in the month of February and March. So I think this is the second closure of the gap of the 10,800, 820 zone. And I think that's where the Nifty took resistance. So after a partial closure to that gap, the last time as well when we had filled a certain gap, there was a bit of a retracement for the index, 300, 400 points. I think maybe something similar, if not a retracement in terms of points, but at least a time consolidation could be in tune for the next couple of days at least. So in that regards, I believe a trader should position themselves with an expectation that the index could expire. I mean, the options could expire today in the range of 10,700 and 750, looking at the built up of calls and the put options. So I'm mixing one buy and one sell. The first one is a buy call, and that's a buy on Hindustan Unilever. I think the stock yesterday managed to give or show some sense of resilience or a contra behavior as compared to many of the index stocks. It managed to rise the last 1.5 hour or so, and closed very near to that 21.90-95 zone, which I believe is a very important resistance for HUL. So would suggest a buy for a target of 22.50. Stop loss could be kept at 21.40. DLF has been one stock which has been struggling, and clearly I think the stock showed signs of correction yesterday as well. It's also nearing, I think if I'm not wrong, it's also nearing or just about on the verge of confirming a breakdown of its major supports around this 144, 145 mark. So I believe DLF could also be a stock which can witness some sort of a selling pressure from current levels. Hence would recommend a short with target of almost 138 to 140 zone, and stop loss could be kept at 150 mark.